All right, there we go. All right, welcome everybody. This is our next to last webinar in our fall financial series. Today we're going to be covering tracking performance and planning for growth. And if you've never been here with us before, I want to just welcome you to this program of the University of Arkansas Small Business and Technology Development Center. We're so pleased to be able to bring you these educational tools to help support small business. If you don't know about the Small Business Development Center, it's a one-stop shop for startups and existing small businesses. We're associated with the University of Arkansas and also affiliated with the statewide ASBTDC network. We've got around 1,000 small business centers across the country. Most of them are affiliated with some of the major universities. It started as a part of a grant program passed by the National Congress back in the late 1970s. It's a really great opportunity for us to be able to help out our local entrepreneurs. Locally, we offer complimentary one-on-one consulting programs and assistance that cover relevant topics for business owners. And if you're not already a client, I would encourage you to go to our website listed there on the screen and go to the top right-hand corner and click get a consultation or register for consultation and just sign up as a client. We'd love to meet one-on-one with you for further discussion about your business in order to help you. It only takes about 5 minutes, and we'd love to chat with you. And my name is Scott Lacy. I'm a former kind of current, definitely current business owner. I've had a couple of businesses. One was a jewelry business. Another was a spa product wholesale business that I ran with my wife. COVID has significantly shrunk the spa product wholesale business. And so now she's doing that all by herself. And I help a little bit on the operations and finance side in the background. As most of you probably know, when your spouse is involved in something, you're generally kind of involved as well. So she's doing that on the side, but done a little bit of small business stuff on my own for sure. I've also got a background in corporate finance. So I've done, both big and small, but my heart really lies in just helping people just in general. And my skill seems to be in small business finance. And so I'm really thankful for this job and just to be able to present programs like this to all of you to help you operate your businesses and grow and be able to accomplish the goals that you set out to accomplish. If you want to get in touch with me, my email is right there on screen. So you can just email me directly. You can also get in touch with me through registering as a client and requesting me as a consultant for any of your small business financial management needs. I also help out a lot with helping people get financing and working with people who are looking to start up a new business. All right, so now we're going to go ahead and get into it. So again, like I said, this is part of our fall financial series, the goal of which is equipping entrepreneurs and managers with the knowledge and tools required for successful small business financial management. So that's what we're here to do. And this is one of our webinars in that series. And we've got, I think, 5 or 6 already recorded that are up on our website from previous weeks. So you can just go to our website and go to the finance section and just scroll down. And we've got several of those webinars linked. And we've been going over quite a few topics and covering some things that we're going to use to build on that we're going to address today. So one of the questions I most often get or find small business owners struggling with is just in general, what would it look like to have a business that is successfully managed well regarding its finances? So just what is exactly successful small business financial management? So I've broken it down into these 3 categories. So in your mind, if you're looking at your business, you're thinking, am I really doing this right? Am I doing this the right way? Am I being successful at it? Am I doing everything I can do? You can think about these 3 things. And so the first one is just keeping accurate financial records. So that basically means just keeping your books, making sure that you're doing your accounting, that you're recording all of your transactions, that you're capturing all of your sales data, that you're talking with a bookkeeper on a regular basis, you're talking with your accountant on a regular basis, and you're not only capturing that data, but you're ensuring that that data is accurate. The second one is proper cash management. We like to say that cash is to your business like gas is to your car. So having enough cash in your business to run your business is what's really, really important. And so you want to make sure that you've always got enough cash available to pay your bills, to make investments, and to keep your business going. And today, that is really what we're going to address with the third one is that wise capital deployment, which is dependent upon tracking your business performance and then planning for your business growth. And it's with those 2 things that we can summarize with the phrase wise capital deployment, which is what we're going to address today. So keep those three things in mind as you're looking at your business. Keep accurate financial records, do proper cash management, and wisely deploy your capital. And just to answer a quick question, we're gonna have about 10 minutes, maybe 15 minutes at the end of this presentation for time for questions. So today on the agenda, we're gonna cover two things. We're gonna look at tracking the performance of your business. So we're gonna look at some key metrics, just some general key metrics that every business looks at to track their performance, to know how they're doing really well. Some of you may have heard this referred to as key performance metrics or KPIs. The second thing that we're going to do briefly is we're going to look into planning for growth, which is that capital allocation that we were just discussing. All right, so here's just a sample of some key metrics that just right off the top of my head, I wrote these down that I think that every business should be tracking and looking at on a regular basis. So if you're wondering to yourself, well, what are the things that I can look at in my business to know if I'm doing better or doing worse or just maintaining my business at the same level? These are just some sample things that you can go to and look at within your business to know how your business is doing or to judge whether your business is getting better or not. So one obviously would be sales. Another one would be COGS, also known as cost of goods sold, is what COGS stands for, cost of goods sold. Just overall profit, and there's different kinds of profit in a business. So there's gross profit, there's operating profit, there's net profit, and there's also net profit after tax. So multiple different kinds of profit that you can see on your profit and loss statement that you'll want to be able to look at. I'm going to show you some of the differences of these later on. You also want to look at your cash flow on your statement of cash flows. You want to keep an eye on your debt and equity. You want to look at your overhead expenses, which has to do with your operating profit, just your cash in general. You want to look at your projections versus your actual. So setting some goals, making some projections based on previous performance, and then looking at going back after those periods passed and looking at what your actual performance was. And then you also want to keep track of things like year-over-year metrics. So if you ever see this abbreviation here, this YOY in finance, typically what it's referring to is year-over-year. So if you hear somebody say, well, what were your sales year-over-year? They want to know what your sales were this year compared to the sales for the same period in time last year, generally a year. That's why it's year-over-year. Sometimes we also look at metrics in the perspective of month-over-month or MOM. So that's wanting to look at sales for this month. So it's not just the previous month to this month. Month-over-month means the sales in February this year compared to sales of February last year. So for example, businesses that are heavily reliant on holiday sales, they want to typically look at what were sales in October, November, and December of 2020 last year compared to what they might be for 2021 for this year. So that could even be quarter over quarter or QOQ. So if you're ever talking to somebody and they say, what were your year-over-year sales? What were your month-over-month sales? What were your quarter-over-quarter sales? That's what they're referring to. Another metric would be, price per square, not just price per square foot, but sales per square foot or expenses per square foot or profit per square foot. So anything, if you've got a retail space or a brick and mortar store, so a key metric that you're going to want to know is what's your performance per square foot. If you've only got one store, it'll be per square foot of that store. If you've got two stores, you might want to know per square foot of each store individually and both stores combined. And lastly, just another one you might want to know would be your customer acquisition cost. So how much does it actually cost you to get a customer in the door and to get a sale or to get a new customer or to get a repeat customer? So those are just a sample of some key metrics. I'm going to go over a few of those and how to pull those today. So how do you track these? So the first thing and the most important thing you want to do in order to be able to track these things is you want to understand your financial statements. And if you're saying to yourself, well, this is the first webinar I've been a part of in this whole series, and I don't even know what a financial statement is, I want to encourage you to go to our website that we listed previously. We've got all of our previous webinars listed on our website in the financial section, and I've got one webinar about it's all about just understanding financial statements and what all of the elements to all the financial statements are. So you want to make sure you understand those financial statements, because if you don't understand those financial statements, you won't know what you're looking at, and it'll be really difficult for you to track what's going on. You'll also want to understand your own POS. So what is your POS? It's your point of sale system. And that's just business lingo for the system that you use to collect sales for your business. So most often this is understood or recognized by people to be the cash register, but it's not just the cash register nowadays. Nowadays, it's the digital system that's used to collect sales, but also to pair the products that you're selling with the cash that you're collecting. So you can look at your point of sale system, usually on Shopify or Square or Stripe or some other point of sale system that you may be using. And you can look in that point of sale system and it's going to show you some sales data that you have, as well as some revenue collection and maybe even some fee data. There's also software out there now that you can use to track the performance of your business. It'll analyze all of your bookkeeping software for you, all of the numbers in there for you, and it's going to spit out reports. And one that I've recently found that just looks fairly user-friendly, and not making an endorsement of it by any means, but just one of the first ones that I found on a quick Google search that's an example for you that you could go and look, that QuickBooks actually has a partnership with now, is called Fathom. And I'll show you guys where you can find that here in just a second. The other thing you want to do in order to be able to track your performance is you've got to set goals, because you're not just tracking performance compared to past performance. You want to track performance in relationship to your progress towards goals that you've set. So you want to think about tracking performance comparatively towards your historical performance to make sure that you're doing better today than you were yesterday and better this year compared to last year. But you also want to track, how am I doing in progress how am I doing in progressing towards my goals? So for instance, if you set a goal of doubling your sales in 2021 compared to 2020, because 2020 was a pandemic year, then you want to have those goals set and written down and somewhere in your computer so that you can compare where you actually are today and then see how close you've gotten to what your goals are for where you're trying to get to for the current year or whatever the timeline is on that goal. The other thing that you want to do that a lot of people really struggle to do because we're all super busy, is you want to schedule regular reviews of the key performance metrics that you've decided to track, of your financial statements, and of the progress that you're making toward your goals. So usually, unless we set down these regular dates to track these things, it typically doesn't happen because of something that sometimes people call the tyranny of the urgent, or they're always putting out fires, or however you want to say it. It seems like there's always something more important. So generally what I counsel most of my clients to do is just to stick with the normal accounting cycle or the normal business cycle, which is typically on the 5th day of the month of every month, or the 5th business day of every month. The books for the previous month should all be closed and completed and finalized, and all of the reports should be sent to the managers, or the managers should be notified that those reports are at least available for the previous month. And the reason it takes until the 5th business day is just because it usually takes the accountants and the bookkeepers 5 days to make all the reconciliations, make all the final entries, and what we call closing the books for the previous month. And so the 5th day of the month that happens. The 6th business day, you can kind of analyze everything. And then the 7th business day, you want to sort of meet with your staff, meet with your team, and you want to look at how you did, and you want to look at how much further you've got to go in order to get to your goal. So schedule those regular reviews. And that's just sort of the general process for tracking your performance. So understand your financial statements, know your POS, know the capabilities it has, know the reporting abilities that it has for you. If you want to look at software that's going to automate a lot of this for you, because some of it is labor intensive, especially in Excel, I would look into using a software service like Fathom. Set goals so you know where you're going and what you're actually tracking against, and then schedule regular reviews. So some of the tools that we can use to do this, I'm going to show you an example here in just a second about how you can use QuickBooks and Microsoft Excel to track those goals. We're going to look at revenue sales and unit sales. I'm going to show you Fathom, and then again, I want to remind you to schedule some of those reviews. So with that, I'm going to minimize this PowerPoint presentation, and I'm going to go into QuickBooks. So this is QuickBooks Test Drive. If you don't have QuickBooks and you just want to kind of look around in it and see if you like it or not, they have a test company or a fake company set up, and you can get to it just by typing in, sorry about that, QuickBooks Test Drive, and just click the link at the top. And then you can scroll down and it's got two versions available. It's got regular online and then online advanced. So you can just go in and it's going to pull up the test drive file for you. And it's called Craig's Landscaping and Design. And so you can see QuickBooks here. This is the dashboard. And so you're going to want to go, in order to track how your business is doing, you're going to want to see your financial reports. So you'll go down to reports, click reports, and then scroll down. And the three main ones you're going to want to look at typically are balance sheet, profit and loss, and then scroll down a little bit further and statement of cash flows. So if you want to track how your business is doing, let's just say you want to see what are your overall sales month over month for a business. So you would find that information in your profit and loss statement. So you click on profit and loss, and it opens up your profit and loss statement. And so we see what we've got, the income section at the top. It says total income down here, and it shows us that our income is $10,200. Well, what if I want to see month over month? Well, QuickBooks can show you that, and then you can also pull it out into Excel, and you can do some analysis on it. So then I would click, I want to see it, every single month for the business for the past few months, and you can enter in a custom date. And I know that for this program, for what they've got plugged in here for test drive, it only goes back to May. So I'll just go back to the beginning of the beginning in May 1st, and then we'll just go to the current date, click run report, and boom, there you go. QuickBooks is going to pull up for you all of your data for every single month for the months that you've plugged in, and it's going to allow you to see how your performance is. And so this just shows month over month what your sales are. So I'm going to minimize this just to lessen the confusion, but we can see, May weren't quite open, just kind of getting going, no sales yet. So then, did my sales get better in June or not? Well, we can see clearly that they did, because then we've got $391 in sales, then $521 in sales. So we can see that the sales are increasing, and in September, big booming, mega launch, it looks like. In September, we did really, really great. And so far in October, 1,761. And so if you want to, you can do some initial analysis by pulling this out to Microsoft Excel. And so you would just click here to the share, and then click export to Excel, and it's going to automatically download, and then just open it up in Excel, and you've got all of the raw data here for you to be able to manipulate in Excel. So I've gone ahead and done some quick adjustments to this to show you some things that you can do. So here's just the raw data that I pulled out of Excel, and then I manipulated it some, and I'm going to show it to you in this next tab over. And so what I've done is I've added a blank column in between each month. So I can add some percentages in, so I can see, for instance, of all of my revenue streams, or all my different sources of income, which one has the highest percentage of sales for the period May through October 28th. And so instead of it just doing it each month here, which I could do, I just went ahead and did the total for all of the months over here. And so I see I've got my design, I've got 5 different sources of revenue. So there's design income here, total landscaping services here, and all of this here just populates down to landscaping services. Pest control services, sales of product income, other services, and then so my total income down here. And so then what I can do is I can type in a formula, and I can just say, well, what's 2,250 divided by my total sales of 10,200? And that it gives me an output of, well, that's 22% of my total sales. And so then I did the same thing for all of my other income categories, and it comes out to my total landscaping services being 64% of my sales, pest control services being 1%, sales of product income being 9%, and my my other services being 5%. And if I total all those up, you can see down here, it comes out to 101%. That's just because of some rounding that's being done here. But if I wanted to look back over the past 5 months and say, well, what's the performance of all of my different revenue streams over the last 5 months? Which one's performing the best? Which one is giving me the most sales in my company? And and the possible conclusion from that would be, which one do I want to continue investing in the most, or maybe where do I need to hire more employees for? And I could look at this and say, well, 64% of my income is coming from one revenue stream. It's coming from my landscaping services. So the actual, job material sales and then the labor installation, that's where it's all coming from. As opposed to my design income, I'm only getting 22% of my revenue from there. Apparently nobody wants my pest control services. I guess I'm not very good at pest control. Other products or merchandise I might be selling, and then other services. So we can see that here, my biggest revenue stream is my total landscaping services. So then if you wanted to see performance month over month, what you could then do is you could do the same formula. We'll just do September and October. So we could do my sales just for September divided by my total income just for September. That gives me 30%. So 30% of my total income for September was a design income. And then I could do the same thing for the month of October, even though it's not quite a complete month yet. Divide by my total income for October, and it's 15%. So we can see 22% for the total period is coming from design income, but it's trending downward. So it was 30%, now it's only 15%. So it's trending downward. So I may want to look into that. So that's a key metric that I would want to look at. You would also want to do the same thing if you're a merchandising business. You'd want to do the same thing for cost of goods sold here as well. Here we don't have, much cost of goods sold because it's a new business, so it's going to be more difficult to do. But if you wanted to track your sales growth by revenue stream, and if you didn't have the ability to do that in your point of sale system, that's the way that you could do it in QuickBooks. All right, let's get back to the PowerPoint presentation. All right, so then your point of sale system, if you wanted to look at your sales and your unit sales, point of sale systems like Shopify are really powerful. They can show you some of that information. But what's the big difference between QuickBooks and your point of sale system? So what QuickBooks is generally going to be the best at showing you is your total sales in dollars, or all of your even expense categories by dollars, but primarily revenue streams by dollars. Your point of sale system is going to be able to show you your unit sales. So it will also be able to show you your dollar sales, but it's also going to be able to show you how many units of each product that you sold. And so the same way you saw me go into QuickBooks and pull that data out, you're going to be able to go into Shopify or your other point of sale system and find that information, and you'll be able to export it in Excel for further manipulation analysis if you want to. But the big difference between the QuickBooks and your point of sale system is going to be QuickBooks is going to show you your revenue by dollars, your sales by dollars, and your POS is going to be able to show you more detailed data on sales per unit or SKU, if you know what a SKU is, a stock keeping unit. So let's see, the next way that you can track your performance is through combining your bookkeeping with a company like Fathom. So let me show you Fathom real quick. So Fathom, it just says it right there on the front. It's all-in-one reporting, analysis, and forecasting. So this would be a great tool for your business. And what this is going to do, you're going to link this with your QuickBooks, and it's going to automatically pull all of this information and create all of these charts and graphs and pie charts and line graphs and give you all this data that you're seeing here. It may be for a little bit larger company, maybe not a brand new startup, it might be, but this is going to be able to create really great visuals for you. And the primary thing it's going to do for you is cut down on all of that manipulation of the data that you just saw me doing in Excel. It's going to automate all of those processes for you. And so if you've got the financial capacity to be able to invest in something like this, it's definitely something that's going to help you, because generally when things don't get done, it's because you're short on time, and this is going to help you automate that process to help you do it a lot faster. QuickBooks has got some ability, but and there's multiple companies out there other than just Fathom that can do this for you. But I just want to let you know that this tool is available for you to be able to do that. All right. And again, I just want to remind you to schedule regular reviews every single month to be able to review your performance over the previous month, look at how you're doing in all of your categories, all of your KPIs, and then how you're doing it progressing towards your goals. All right, and then lastly, planning for growth. So this would be for if you're wanting to expand, or if you are wanting to hire people, if you're wanting to expand a product line or offer more services or offer more different products. What does that process, actually look like? So the first thing that you want to do is you want to look at the past. You want to look at your financial statements and see how you've performed over the past and see what areas you might want to invest in. You want to also set goals. You want to know where you're going and why you're going there. So I talked to a business owner recently. He's getting ready to retire, and he's got a firm goal in his mind that in 4 years he wants to sell his business, and he wants to sell his business for a certain amount of money. And we know that in order to sell his business for a certain amount of money, he's going to have to hit certain sales goals, and he's also going to have to hit certain profit goals. He's also going to have to hit certain cash flow projection, or not cash flow projections, but actual free cash flow goals. And so he knows that in order to hit that goal, he's got to plan for that growth. And so the next thing he's got to do in that process, he's got to anticipate the requirements for that growth. So just because you want to grow or because you want to increase your sales, there may be some constricting factors that you've got to deal with. So for instance, if you're a restaurant and you want to double your sales and you've only got 10 tables in your restaurant, and everybody's taking up that table for an average time of 45 minutes to an hour and 15 minutes, that limits you and the number of tables that you can turn per hour or per lunch service or per dinner service. So if you want to double your growth, or if you want to double your sales, you've got to find a way to either be able to turn those tables more quickly and get more capacity, or you may have to add on to your building in order to be able to have more tables to be able to turn so you can hit those sales goals. So the number of tables might be a constraint. Labor might be another constraint. If you're if you cut hair, or if you have like a tire shop and you're changing oil and you want to grow, people can only cut hair so many times per hour. They can only change the oil in so many cars per hour. So if you want to grow, you may need to add more bays. You may need to add more labor, but you need to anticipate those requirements in order to get to the goals that you want to get to for your growth. So you want to look at your buildings, you want to look at your labor, and you want to look at your financial capacity as well. The next two things you want to do is you want to forecast and budget. We covered the forecasting and the budgeting in depth in a previous webinar, but cash forecasting is one of the most important things that a business owner can do, because oftentimes business owners are managing their businesses strictly off their profit and loss statement, and then looking at their net profit and comparing it to their bank account and wondering why those two things don't match. And the reason is because profit doesn't equal cash in the bank. You've often got cash items and non-cash items that are changing those amounts, and so they're often not matching. And so you want to make sure that you're not just looking at your P&L, but you're also looking at your statement of cash flows. And again, that's something we covered in a previous webinar that you can go back and look at. And if you want to do cash forecasting, and you don't have a template and you don't want to build one for yourself in Excel, there's another good service that you can go out there and use. It's called a Smartsheet. And I'll show you their template that they have, but I can also help you develop a custom one, or your consultant in your local ASBTDC office can help you develop one as well. But this is basically what it will look like. You can see you've got your months listed out left to right here, but then you've also got your cash inflows and then all of your cash outflows every month. And you will enter typically the first month as the actual month. So you could potentially list October as month one, and then you'd want to project out for November, December, January, February, March to ensure that you've got the proper amount of cash. And you would want to match these cash flow projections with your desired growth projections as well, in order to be able to make sure that you've got enough cash to finance that growth. And again, this is on a template off a website called Smartsheet. But the big difference between this cash flow projection sheet and the P&L is this shows all the actual cash in and all of the actual cash out of your business, not just your P&L that has some cash and non-cash items on it. All right. Let me get to the next one, and then we will get to some of your questions. So the next thing you want to do is you want to make sure you budget. Most of you, I'm sure, have created a household budget. The reason a budget is important is because what you're actually doing with a budget is not just making sure you have enough money, but you're actually making choices about where to spend money in the most effective places where you're going to get the most bang for your buck or the most return on investment. So I want you to think about business budgeting, not just as making sure that you've got enough money in the bank account to pay for your bills. That's really what cash forecasting is for. Budgeting is for looking at what your goals are and where you're going next, and making sure, yes, first that you do have enough money to spend on your fixed costs, but then also looking at new potential areas of investment and allocating the money that you have to those specific areas, and then holding that spending accountable to those set budget amounts, and then analyzing your budget spending in accordance with your goals moving forward. So having a cash forecast sheet as well as a budget in order to plan for that growth. And lastly, again, you want to schedule regular reviews to make sure that you're on target or to see if you're overperforming or underperforming. And again, I just want to mention these classes are meant to be generally a little bit shorter in nature. We can't obviously cover absolutely everything in detail in just 30 minutes kind of after your lunch break. I really want to just give you a quick overview to give you an idea of some of the things you should be looking at as a business owner that you could potentially be looking into on your own in your own free time, but really also for you to be able to come to us and let us help you with that really in depth one-on-one. We'd love to see you in the office or over Zoom, even over the phone, and we can help you or work with you and co-create some of these custom tools for your business to be able to track some of these KPIs or some of these key performance metrics, and also help you plan for growth. And just real quick, I want to go back to what some of those KPIs might be. So sales, tracking your cost of goods sold, making sure you're not overspending on your inventory, looking at the various kinds of profit, cash, debt, equity, and those kinds of things. And so with that, we will take some questions. So if you've got some questions, you can either put them in the Q&A here, or you can put them in the chat box. I'm going to go ahead and make sure I've just got everybody's information while we're waiting on a couple of questions to come in. Really appreciate all of you being here. I'll stick around for a little bit. So while I'm waiting, let me show you guys where you can find these webinars. So you just go to our website. So it's asbtdc.uark.edu, and then click resources, documents and resource library, and scroll down. And this is where all of our resources are categorized for you. You can click finance resources and then scroll down. And this is a list of all of our webinars and sometimes PDF documents that are going to help you with some things. And as you can see, video, and then link to other resources down here. So here we've got financial foundations, small business finals, financial reports, why you need them and what to know, finance and accounting. Let's see what else we have. How to finance a business. So lots of great resources for you there. And if you want to get a consultation, you can just click that button in the top right-hand corner. And this is where you register to be a client with us. All right, so it doesn't look like anybody's got any questions, but I'll wait just a couple more minutes. Just keep in mind, as you're thinking about how you're managing your business, and if you're managing your finances well, just keep these three things in mind. First step, make sure you're keeping accurate financial records, manage your cash well, make sure you've got enough cash in your business to pay your bills and that cash doesn't necessarily equal profit. I've got a whole video on that as well. And thinking about wise capital deployment. So planning for the future, not just hoping for the future. All right, thank you guys so much. It was really great having y'all. And again, you can email me if you've got other questions or if you want to schedule a one-on-one consultation. I just had a question come in. Do I have any examples of the Fathom reports? I haven't paid for the trial, or I haven't looked into the trial, but they've got some pretty good reports out there for you that are going to track a lot of these KPIs, and it's very customizable as well to give you the information that you want. All right, thank y'all so much. I hope to hear from some of you soon, and good luck with your businesses.